we've seen a number of iterations like this since the US-China trade wars and trade tensions have gotten started. I mean, I guess our baseline view is that both the US and China will continue to probe or explore the other side's bottom line in terms of how much they're willing to tolerate. But I think the thing that we have to remember, and this is critical, is that both the US and the China economy are operating from a much weaker point today than they were 12 or 18 months ago during sort of the more aggressive parts of the trade war. So while the geopolitical risk feels higher today, and I would acknowledge that, I think both leaders will be very sensitive to not derailing sort of the early stage recovery that they're both trying to engineer.
And that's a very important point, Eric, that you've highlighted. Good morning, Tanveer, also joining in this discussion. Where are we in China's recovery story as of now? Because post the NPC, that somehow took a backseat. Yes, they skipped giving out the growth rate for 2020. But interestingly, when you look at the data coming out of China and you look at the manufacturing PMIs, you compare that to the Caixin PMI, you realize that there's a big gap where the state-owned enterprises, the state-owned segment of the economy is showing growth and expansion, but the private gauges are still in contraction territory. How do you reconcile what's happening in these two segments?
So look, Tanveer, I think it's a great point, and I think it highlights one of the themes that we've been discussing quite actively, which is this idea of the haves and the have-nots. Policy support will have a bigger impact on some parts of the economy, some parts of the capital structure than others. And I think this divergence, which you've just described, is a perfect example of that. The domestically driven economy in China does seem to be benefiting from sort of the first in, first out trajectory from the coronavirus. But as you correctly point out, and the previous speaker also commented on, a lot of this is domestically driven. When we look at new export orders, in other words, the data in China that is driven by global trade, it's still very weak. We see similar examples around the region, whether it's the data out of Korea, Taiwan, etc. Demand from the rest of the world still appears very soft to us. And I think the reconciliation of that gap is going to be extremely important to the forward outlook for the second half of the year.